Well, let's bring back someone who follows the industry closely, Tom Brown, founder and CEO of Second Curve Capital, a hedge fund that specializes in financials. And Tom, last time you were on, you famously said that Moynihan was a disappointment in terms of the new pick as a CEO. Anything change your mind?
No. In fact, my discussions with a few of the board members would say it was they were disappointed too. That they wanted somebody.
The board members themselves.
The board members who voted for it. They wanted somebody from the outside, but the Fed just made it too difficult. Between the compensation requirements and other issues about people's backgrounds, that they ended up settling, frankly, for Moynihan.
Any specific board members you'd care to mention?
No.
But I'm trying to get my head around it. They voted for Moynihan, and yet they tell you on the side that they're disappointed with this. Is that considered correct corporate governance or what?
I think the whole process was terrible. That somebody wasn't in place when Ken Lewis would announce his retirement back in September, that he was going to retire at year end, that was a mistake in corporate governance. And then the fact that they put this self-imposed deadline of 12/31 that they had to have a candidate, I thought was bad as well.
When this announcement came down, you said, let's wait to hear what Moynihan has to say. If he says more of the same, then the next step is, what does the Fed do? Because you think the Fed will force Bank of America's hands, for example, capital available to trading desks. Moynihan didn't say anything that they're not going to make, say, more or the same amount of capital available. So what happens next?
Well, I think what we just heard was some very general, high-level comments. But I am convinced that the Fed is going to require them to reduce the risk that they take on the trading desk. We're not going to
Which means what?
Which means less capital, less smaller positions that they're going to be able to take.
Breaking up the bank?
I don't think they're going to break up the Fed can't do that. But the Fed doesn't want
They can't
this.
do it, but could they force the hand?
I think we're just going to see them force downsizing of the risky areas. So they're going to let them grow the consumer deposit base as much as they want. They're going to let them grow consumer loans as much as they want. But they're going to force the high-risk, high-volatility areas of the firm to be reduced.
But speaking of growth, when Moynihan spoke about international markets, he wasn't talking about growing the traditional banking business. He was talking about wealth management, investment banking, capital markets, that kind of stuff. If they're dealing with some comments from the Fed or a push from the Fed, how's that going to affect that strategy?
Well, now you mentioned some businesses that are not high volatility, high risk businesses. Wealth management being one. You mentioned earlier talking about the IPO activity outside the U.S. That's certainly not a high risk activity as much as the principal trading businesses.
What about the views on these stocks? We were just showing a chart earlier of what the street analysts think will happen to Citigroup, Bank of America, JP Morgan over the next 12 months. And by and large, analysts are bullish on Bank of America, even though we've heard from some frustrated investors that Moynihan was the chosen CEO.
And you too, right? You are actually, in fact.
Well, I think in 3 years' time, when you can say, how did Brian Moynihan do at the end of 3 years? You're going to say to me, how are you so critical, Tom? Because the stock doubled. And I think it will double over the next 3 years. The company can earn $3 a share down the road. Put a 10 multiple on that. That's a $30 stock. It's trading at a little over $15 today. However, we're looking at doubles and triples and quadruples in other banking names, smaller banking companies.
Then Tom, okay, no, I didn't mean to interrupt, but then in the end, does Brian Moynihan have 3 years from all indications from what you're hearing inside the board?
It was just like when Ken Lewis took over. Ken Lewis took over after Hugh McCall did a period of outrageously expensive acquisitions that didn't work. Ken Lewis took over. He said, I'm going to stop doing that. It worked for 3 years, and then he went on the acquisition trail again and blew up the bank. I think you're going to see, and after 3 years, everybody said Ken Lewis is doing a great job. And I think that's what we're going to say about Brian Moynihan.
So you think he'll have 3 years to do this?
He'll have 3 years, but in 5 years and in 7 years, then we're going to have some issues.